Morning, Martin. How are you? Craig and Carla here.
Morning. Very good. How are you?
Yeah, really well, thanks, mate. Really well indeed.
Good.
Botswana sounds very interesting, Martin.
Say that again, Jack.
Botswana sounds very interesting.
It's a fascinating country.
Yeah, I've been there
Yeah.
long time ago.
Yeah.
When did you get back, Martin?
Yesterday morning.
Oh my goodness. What's the time difference?
Just
Not much.
1 hour.
Not
That's
much. Yeah.
all. Red eye fly back overnight.
Okay.
Morning, everyone.
Morning.
Morning.
Martin, can I just check? Am I on first? And do you want to see if I can share my screen now, or do you just want to wait?
Yeah, you're up first.
Yeah. Can I try and share it now, or is that?
Yeah. Just check, see if it works.
I just need you to authorize it, I think. Is that sharing the notes as well, or just the?
There's notes below, yes.
And now it's fine, is it?
You got it side by side.
Oh, okay. Now we're good?
Yep, all good.
Awesome. Right, I'll stop now.
Morning, Martin.
Morning, Gary.
You all right?
I'm in one piece again. No, return strapline all the time, that is.
You're a globe trotter, aren't you?
Literally.
Was it good, though?
Fantastic.
What's next, then? Here we go.
Anaheim.
Oh, yeah.
I've come back from that and for a few days, and then I'm going back to the States to sail back across the Atlantic to the
more
UK.
sailing?
Yeah.
On a cruise ship, of course, Martin, yeah?
Yeah. 70-foot cruise ship where you have to crew. Still got a couple of people joining, so we'll start in a moment.
8 o'clock.
Another excellent turnout this morning. We've got 36 in the room and more joining us as I speak. Okay, so I will let people in as they request. We've got an excellent lineup this morning in two parts. We've got two external speakers in Dan Parkinson, and I'll tell you a little bit about him before he comes on. First of all, a subject that's very dear to my heart because it is what has built my business over the last 15 years, and that's the subject of social media marketing And I think we all can learn from Chris on this subject. He's going to give us a 20 minute talk on an educational perspective of why we need to be thinking about this, not only today, but in the future. So over to you, Chris. The floor is yours.
Brilliant. Thanks, Martin. I'm just going to share my screen quickly. You can see the two slides, can't you? It's a good job we didn't practice that. Right, here we go. Let's try again. Right, hopefully you can see just the one slide.
Yeah.
Okay, brilliant. Right, well, good morning, everyone, and thanks for having me. I think we're all here just to hear Martin's stories of Botswana, but for now, I'll talk to you about social media for 20 minutes. So my name's Chris Miles. I'm Managing Director at SM Advice. And contrary to popular opinion, we're not an advice firm, but I'm constantly having to explain that we're not. But we were set up by a chap called Settle Meta, which in his initials also was the same as social media, so we thought it was a good name at the time. But there we go. And I'm here to talk to you about digital marketing and the landscape in financial services, specifically in 2026. Before we get into that, a little bit about us. I'm just going to move the slides on and move you out of the way. So SM Advice was founded back in 2024 with a really simple ethos and idea, which was to support specifically financial advice firms with their social media. We recognized at the time that networks were producing some great content, but advisors are just too busy to actually use it. So that was kind of how we originally started. Since then, we've grown into a trusted social media partner for IFAs and tied advisors across protection, mortgages, and wealth right across the UK, creating branded, engaging educational content for advisors. So we're a small team, but we are, big thing about us is, and what we like to shout about is that we are were financial services professionals. I'd say we still are. With over 30 years plus experience between us advising and supporting financial advice firms. So I think we have a good lens on the pressures and challenges that you will face, and ultimately want to be here to support you and help you navigate social media safely. I joined in August of last year, and since then I've been on a bit of a crusade to change the way social media is seen in financial advice. In my view, too much content is cautious, generic, and easy to scroll past because of the nature of consumer duty and the FCA rules. It ticks the box, it stays in the lines, and potentially gets ignored. So I genuinely believe we have an opportunity to push the boundaries of social media within financial services. It doesn't have to be boring, and hopefully in today's session I can share my thoughts on exactly this. And here's a very short video. Oh, it's going to just play again, isn't it? There we go. Stop that. Right. So let's look at the problem. And I don't like to refer to it as a problem, more of an opportunity. But there is definitely a distinct mindset shift in 2026 with customer behavior. And I'm sure this quote is something you may have said or heard. But ultimately, we're experiencing a bit of a change in customer behavior, as I said. And most of your business, even if most of your business comes from referrals, and I do hear that a lot, the first thing someone does after they've been referred to you is look you up. Now, used to be particularly on Google, more increasingly, they're looking you up on social media before anything else. And if you're not there, or even worse, you haven't posted in 6 months, or you're posting sporadically, it raises doubt. Are you still active, and are you approachable? So, and if you look online, AI is increasingly adding further layers of search optimization, which essentially means that you need to be aware of this to stay top of the scroll. So the modern client journey, and this happens literally in minutes, not days. You get a referral and the client looks you up and they ultimately judge your credibility. And I just want to share a very quick scenario that might feel familiar. You receive a referral, a client with a decent pension pot, maybe 500,000, 1 million, possibly more. They've been introduced by an existing client who trusts you, which is brilliant. On paper, this is exactly the kind of case you want, and historically would have been enough. Referral equals relationship, relationship equals business. But today, something slightly different is starting to happen. The client goes away, and before they agree to meet you, they start doing their own research. They Google your name, they look at your website, then they check LinkedIn, not much there potentially. And then they do something really interesting. They don't search for you anymore. They search for things like, should I consolidate my pension? Is now a good time to invest? What should I do with £1 million at retirement? And they land on content, videos, articles, opinions, some of it from qualified advisors, but unfortunately, a lot of it isn't. And the key point there is the person who's shaping their thinking in that moment isn't you, who was referred to in the first place. Not intending to sort of scaremonger at all. It's more a case of just what's happening currently in the modern world. So SEO to GEO, this is a bit of an AI shift, and I'll kind of, if you've not heard of this terminology, I'll explain it all. But SEO, I'm sure you're familiar with, search engine optimization. This is essentially Google. We all remember the early 2000s, and generally the first people to adopt this had the most success. Well, the same is happening with the AI revolution. GEO stands for Generative Engine Optimization, and this is essentially AI, the large language models. And they search a little bit differently to how SEO. So whilst we got a head around, we need SEO, we know we need to have a website, we know we need to have certain tags and keywords in that website, and we know we need a Google My Business page. That's all changed a little bit with GEO. And it's something that you just need to be aware of. And in terms of the sort of things that GEO looks for is, and this isn't exhaustive, but things like how-to guides, checklists, top 10s, FAQs are brilliant for this. And if you don't have them on your website, you really need to. Location-specific content, make sure you've got a location or an address set on your website. Make sure you're in certain directories, local directories, Thompson and Yale specifically, which sounds a bit old school, but they are genuinely being looked up by GEO. So long form content works brilliantly on GEO. So things like blogs on your website that are regularly getting updated, that works. If you're on LinkedIn and you use it for, you can publish essays and articles, again, all of that will help push up the rankings with GEO models. Infographics, again, they work really well either on social media or on your website. So a lot of things I refer to, it's digital marketing in general. It doesn't just specifically need to be social media, but that is increasingly becoming the main player. So I just want to cover quickly the 26 top 5 trends in digital marketing. And this is across digital marketing, but I've tried to translate it into what this means for financial services, because it does all seem quite theoretical up until this point, algorithms, AI, and all of that stuff, but it's actually happening now. So the top one, visibility is becoming a lot more interactive. We're moving away from people just watching content. They want to engage with it, polls, Q&A, comments, etc. They want to have a conversation. So when someone is referred to you, they don't just want to read about you, they want to be able to interact. So in reality, this means asking questions in your social media posts, encouraging interaction in your client newsletters or websites. And I think some firms I've spoken to use an specific app, or they've got a client portal with a network that allows them to stay in contact with the clients. Next one, community over content. And this is quite a big shift. People don't just trust brands anymore, they trust people. Which is why LinkedIn suddenly had a bit of a boom, and I mentioned that a bit later on, but it's really important to use the power of that. And an example in financial services would be client testimonials. That's community content, that's content written by your users, Google reviews, real life scenarios and case studies. Ultimately, your best marketing asset already exists, and that's your client. Third one, the rise of micro authority. And this really is about sort of quality rather than quantity. You don't need 10,000 followers, or even 1,000 followers. 500 or 500 to 1,000 of the right people is way more powerful than 10,000 of the wrong people. And that's where LinkedIn again has become really successful. And I guess you'd say, I don't want to say the death of Twitter, but the demise of Twitter has certainly led to more people sort of moving to LinkedIn to have their social client-to-client B2B conversations. The key thing about LinkedIn, I would say, is don't post from your company page, post from your individual pages. Again, as part of the whole community aspect, people want to speak to people, not companies. So you don't need to be famous ultimately, you just need to be findable. And that's the key message there. Number 4, we've talked a bit about AI is changing everything. Clients are no longer just typing into Google, they're asking specific questions. What should I do with my pension? And the answer they get comes from the content that you've produced, either on social media or on your website. And the last one, personalization. So generic content just doesn't cut it anymore. Clients expect relevant, timely, specific content. And because of this, actually, email newsletters have seen a bit of a resurgence if done well and interactively, because it allows that content to be personalized to that individual, that particular problem. So segmenting your clients with targeted emails is really successful. And also emails, is a really cheap way of marketing. So those are the top 5 trends that we're currently seeing in 2026. So I guess that refers to, so I wanted to take a moment to share what I think good looks like, taking that into account. Now, I'm sure a lot of you are already on social media to a degree, but if you're not and you never have been, we've also got a guide on our website, and I can share a link to that, which is a really good startup guide for using social media for the first time. The first thing you need to do before creating any content is to look at where you're posting. It's very easy to just think you have to be everywhere. Absolutely not true. So it's really important to pick a platform where your clients are. And this isn't like obviously this is an average. There are lots of clients on lots of platforms, but as a rule of thumb, these are kind of the ages and demographics you'd expect on all of them. Just quickly run through Facebook, very much the old lady of social media, but it's becoming increasingly harder to reach even your own clients now, due to the changes in the algorithm. And I'm sure you've seen this on Facebook. You'll often get posts of things you might have scrolled on and sort of maybe just watched for 10 seconds, and all of a sudden you get those videos. You'll get a lot more of that content rather than you would your actual friends or followers posts, but it still has a place. Instagram, interestingly, was a bit of a younger client base, really good for sort of first-time buyers and protection, and early investors. But the key thing about Instagram in the UK is we spend longer than any other country on average a day on Instagram. So we've really taken it to our heart. So I guess it's really worth considering that and leveraging that as an advisor. LinkedIn we touched upon briefly, and like I said, this is becoming one of the primary significant platforms. It is obviously essentially a B2B, but it's great at building introducer relationships. It's also great, as I said, for longer form content. And that's the content that gets you up the rankings on search. TikTok, it's very much younger clients. My 18 and 20-year-old, everything's on TikTok. But if it's not there, that's where they get everything from, news, everything. But it is gradually getting older all the time. The great thing about TikTok at the moment is there's a lot more watchers than there are content creators, and particularly in financial services. So if you're brave enough to produce video content, you've got a lot more reach until that suddenly becomes saturated, potentially like the other platforms. So my advice is to choose LinkedIn and then one other master channel. It doesn't mean you only post there, but that's where you focus most of your energy. And every high-performing advisor we work with has a clear primary platform. So what does good content look like? I guess there's no hard and fast rule, but it's simple, it's consistent, it's engaging, It's authentically you. So it will be different for everybody because ultimately it has to feel like your brand. And most importantly, it's compliant. But before you post anything, just think about who you're trying to reach. What are they worried about? What questions do they need asking specifically today? The best content you'll ever create is simply answering those questions. I think recently, as an agency, we looked at just the top 12 Google searches in financial services, in wealth, in investment, in protection, in mortgages in 2026, and created some content answering those questions. Because if that's what clients are searching for, that's what they want to see. Sometimes that means being bold. Sometimes it means just simplifying something complex, but it always starts with understanding your audience. And the most important thing is don't tell people what you do, just show them how you can help. Celebrate success, which is not always easy because not everybody likes to blow their trumpet, but if you've won an award, if you've been shortlisted, share it. If you've you've got a 10-year anniversary or a 20-year anniversary or something, share it. If somebody in your office or in your business has been particularly successful or achieved something, share it. And also stuff outside of work as well. It's really important to be personal and for your clients to understand you. And just finally on this, interacting on social media is just as important as posting. It's not a broadcast tool, it's a conversation. So like, comment, engage where you can. Think of it like a networking event. You wouldn't walk into a room, say nothing, and expect relationships to build. So the same rules apply on social media. So what works in FS in 2026? The content that performs best isn't clever, it's relatable. Real always beats polished, and human always beats corporate. So things that answer questions for like what happens if I can't work? Will my pension be taxed when I die? That's what people engage with. Real life questions. And there was also, as I mentioned, a shift towards user-generated content in 2026. And I guess this has always been there, but client stories, client testimonials. Honestly, the amount of firms I speak to have got I spoke to one last week, 380 something 5-star Google reviews, but no one knew about it. So this is really, really great content and really easy to produce. A quick touch upon compliance, everybody's favorite subject. But you strip everything back and the regulator is just asking for one thing. Your communication must be fair, clear, and not misleading. And those words must underpin everything that you do. So what does that mean? Fair means balance, not just the upside, but the reality. Clear means English, plain English. If a client wouldn't understand it, it needs reworking. And I always suggest just test this on a friend, a family, or a colleague member if you're not sure if it lands, just to make sure that it's understandable. Not misleading means no exaggeration, obviously, no stretching the truth, no selective storytelling. And then the other key question we always get is what actually counts as a financial promotion. And this is where advisors can often get caught out and often will be the reason why advisors won't post because they just don't want to risk it. So essentially, if your content invites or nudges someone towards a financial decision, it's likely to be a financial promotion. So that can mean talking about specific products or services, posts that encourage someone to get in touch, case studies that highlight outcomes, or videos explaining why someone should act. On the flip side of that, though, there is content that typically sits outside education, like what is income protection, actual factual posts, general awareness such as why having a will matters, or brand building without any call to action. And the key thing there is even if you put a phone number on or an email, that can be perceived as a call to action. But if you just want to put something factual on there, clients, if they're interested and they're engaged with them, will always contact you anyway. So you don't always need to be as explicit to say, if this interests you, call me. You just need to put it out there. Compliance is ultimately your competitive advantage versus influencers. So it shouldn't be a reason not to post. I mentioned before that we've got a free social media guide, and this is really aimed at anybody who's brand new to social media and hasn't posted before. And if you want to scan that QR code, it takes you to a link to download that absolutely free. So I'll leave that there and I'll also send that in the slides. So just very quickly introducing us, because obviously SM Advice, we're just really passionate about everybody utilizing the power of social media. So we want everybody to be on it. I think the last stat from Amy Viewpoint last year was 51% of advisors in the UK aren't on social media. So that means more than half are not using it. So we're here to really get support advisors with sessions like this to feel more confident. But ultimately, we're aware that one of the biggest barriers to doing this and doing it well is time, which is, I guess, why we're here. And a little bit about what we do. So essentially, we're not a generic agency. We're working with people who, you're working with people who understand your world, which is financial services. We're also incredibly grateful to be supported by a strategic advisory board, which includes some real heavyweights in FS. So they've given up their time to meet with me once a quarter and share their brains, which is invaluable and keeps me in check. So I guess ultimately what we aim to do is take away the pain and manage your social media so you don't have to. So we'll look after all the compliance, the posting, the creation, and the consistent posting. So just a final thought before we end. So I guess it's not social media and digital marketing is not a guarantee of new clients, but it will make you immediately more visible to potential new clients. And as we said before, it will validate you and your brand when your future customers look for you online. Referrals build your business, and that's great. Social media protects it, and AI will reshape it. Thank you for your time today, everybody. I'll just leave a slide here, which has got our website, smadvice.co.uk, and a link to our social media. But yeah, it'd be great if you could give us a follow or get in touch if you want to find out anything more. Thanks for your time today, guys.
Thank you, Chris. Excellent.
Thank you, Chris.
I'll stop sharing.
Good starting point for those that think they need to be involved or think they need to start using social media. Sure, if you want to follow Chris up, that will be absolutely fine. Our next speaker, I do not know whether he's in the room or not, but that is Dan Parkinson of Bitcoin IFA. If you can let me know if you are in the room or not, that will be very helpful. Otherwise,
I'm in the room, Martin.
You can, right? Okay, so Dan is the Bitcoin IFA and it's probably not everybody's subject. I think it's very important. I think it's very important that we know as much about this as possible because clients do talk to us about crypto. I know this talk is specifically about Bitcoin, but I think the more we know about the subject, the more educated we can be when we're in front of our clients. So without further ado, over to you, Dan. Let's hear all about Bitcoin.
Are you able to see the slide? Because on my screen it's gone slightly skewy. So are you able to see the full slide?
I can see part of it, but not all of it.
So it's been cut off, is it? Okay, let's try this. Oh, how about now?
Yep,
that's better.
Perfect. Okay, great. Give me 1 second. I forgot to plug in my little doodad here. Let's make sure that this works. Excellent. Okay, so thank you for the introduction there, Martin. As Martin mentioned, my name is Dan Parkinson. I am the Bitcoin IFA. I'm a qualified but no longer practicing or regulated financial advisor. Instead, my role is to train and educate financial advisors on Bitcoin and digital assets. I found Bitcoin because I lived through hyperinflation in Lebanon for 3 years. During that time, the Lebanese lira lost 99.9% of its purchasing power in just 3 years, which is how I found Bitcoin. And at this point, I've been in Bitcoin for over half a decade. I host a Bitcoin podcast aimed at financial advisors. Shameless plug, the Bitcoin IFA podcast. You can watch it on YouTube, download it wherever you get your podcasts. Things to note throughout this presentation. The presentation has been built as both presentation and handout, so some of the slides are quite wordy. Just focus on the headline of the slide and the words that I'm going to say. I will send this as a follow-up PDF. You will receive the presentation. Nothing is contained is financial advice. I'm not pushing Bitcoin or any funds or equities. The intention is to educate and inform. We can hopefully there's time for Q&A at the end. Always do your own research. Don't trust, verify. One of the things the Bitcoin community is often accused of is being a cult. If it is a cult, it's the only cult in the world that I have ever found that encourages critical thinking. So do not trust, verify. There are sources to all of my slides. There are sources to all of the data on all of my slides. And look out for a special offer at the end. Okay, we're going to do this in 3 sections. We're going to run through a real clip here. 20 minutes is not an ideal time. The full webinar that I typically present for this, or that is pre-recorded, is 2 hours. And our full workshops are typically 3 hours with time for Q&A. Bitcoin is not typically a subject that you can fully wrap your head around in 20 minutes. So we're going to move pretty quickly. There's 3 sections. What's the problem? How can Bitcoin solve the problem? And what can Bitcoin do for me and my clients? So in 2 words, what's the problem? Currency debasement. There is a link here to an excellent video by a chap called Joe Bryan. I highly recommend going and watching that when you receive the presentation, or if you want to search for it. It's called What's the Problem by Joe Bryan. It's half an hour long. I would suggest to you that it is one of the most cost efficient 30 minutes that you will ever spend, and it could end up being priceless. But the issue is currency debasement, and currency debasement or government borrowing is accelerating exponentially. Our response to COVID, pre-COVID, the US had $18 trillion in debt. That was 6 years ago. Our response to COVID was to print $6 trillion. So to a global emergency, we only printed $6 trillion. We're currently adding $6 trillion about every 14 months now, and it's accelerating. US government debt just passed $39 trillion, so this clock on the left is out of date. And on the graph on the right, the blue line generates the income to pay the interest on the red line. And this is again out of date. If you were running your households like this, if your clients were running their households like this, they would be bankrupt. But the governments can not go bankrupt because they can always meet their debt obligations nominally. But the issue with that is that consumers don't produce inflation, producers don't produce inflation. Inflation is produced only by too much government spending and too much government creation of money and nothing else. This is Milton Friedman saying that in the mid-70s. This was his warning as a consequence of coming off the gold standard in 1971. He is a Nobel Prize winner for economics. So he warned this in the mid-70s. This warning went unheeded. Now, I show a lot more data in the full training for this. This is probably going to shock you. We are trained that we need to beat the Bank of England's 2% inflation target. Well, headline CPI hasn't been 2% for over half a decade, but even headline CPI is not high enough. Your real hurdle rate is 12%, arguably higher. So in order to maintain your purchasing power, your assets need to return 12% after fees and taxes. And side note, if you're not getting a 12% pay rise every year, you are falling behind in terms of purchasing power. We're going to skip through this quite quickly. As I say, there's a lot more data in our full training, but here is some quick data on this. There are 3 ways that you can pass on inflation to a consumer. You can reduce the size and or reduce the quality and or increase the price. But when you have single ingredient foods that are measured by weight, i.e. a pound of ground beef, a pound of coffee, or a dozen eggs, you can't reduce the size and you can't reduce the quality, meaning you can't hide inflation. You have to pass on the prices to the consumer. And when that's the case, the average of inflation for those 3 goods over the last 5 years has been 21%. Eggs have been over 30% inflation for the last 5 years. So when you can't hide inflation by reducing the size or reducing the quality, and you can only pass on price increases to the consumer, inflation is, for these 3 goods, it's 21% a year for the last 5 years. So inflation is realistically double digit. And Bitcoin is a solution, I believe it is the solution to protect ourselves and our clients against the inflation that will be coming as a consequence of too much government spending. So how does Bitcoin solve the problem? Well, Bitcoin has outperformed that 12% hurdle rate by 105% since 2012. So it's averaged 125% CAGR since 2012. Over the last 5 years, that's more like 60%. And over the last couple of years, it's gone down again. It's probably more like 20 to 30%, but it's still significantly outpacing the real rate of inflation and very significantly outpacing headline inflation. In order to understand how it does this, we need to understand what Bitcoin is. But the first thing we're going to do is run through what is not Bitcoin. I always say that and then jump straight into Bitcoin. I need to rephrase that. But Bitcoin is a digital commodity analogous to digital gold, i.e. decentralized, no central issuer. It is backed by digital power in the same way that gold is backed by power and energy. And it's for capital preservation and appreciation. Bitcoin, analogous to digital gold. Cryptos are, you may have heard of these, so currencies like Tether, securities like ETH, tokens like Doge, or unicorn fart dust, right, which is a real crypto token. These are cryptos. These are analogous to VC-backed tech startups, penny stocks, or outright frauds. Bitcoin and crypto are not the same. Bitcoin analogous to digital gold, crypto analogous to VC-backed tech startups, penny stocks, or some are outright fraud, scams. But the FCA classes them all as crypto assets. So, a useful framework for Bitcoin. Legally and regulatorily, it is part of the crypto assets category. Economically and investment-wise for your clients, it deserves separate analysis. So Bitcoin and crypto, not the same. The FCA classes them as all one category, crypto assets. So then what is Bitcoin? Bitcoin is the nexus point of money, technology, and decentralization. A very quick history of money. We had bartering. Bartering only works up to about 100 people, so a tribe, because after that, if I've got eggs but you don't have any apples today, well, then we need some form of unit of exchange. We have used things that are always very scarce and difficult to find or create. We have used shells, we've used swords, we've used cattle. That's where we get the term chattel. We then found silver, and then ultimately we found gold. And for 5,000 years, we used gold because it's incredibly scarce. It's very difficult to get hold of. There isn't a lot of it around. And then in 1971, we came off the gold standard and went on to the currency standard, which is not backed by hard money, such as gold. So for 5,000 years, we had decentralized money in the form of gold. Bitcoin takes all of gold's characteristics and improves on them by layering on technology. So Bitcoin is the center point of decentralization and money, which we've had for 5,000 years in the form of gold, and then adds technology on top. Bitcoin is an anonymous, permissionless peer-to-peer payment system. It's actually technically pseudo-anonymous. We go into that in a lot more detail in the full webinar. If I give you £10 in cash, that is a bearer instrument from me to you that is passed from me to you anonymously and permissionlessly. If I wanted to give you money digitally, before Bitcoin, there had to be a third party involved. It had to go from my bank to your bank. It had to go through PayPal. It had to go via Amazon, eBay, whatever it was. There always had to be some form of third party involved for me to send you money digitally. Bitcoin removes the need for that third party. So I can send you £10 of Bitcoin anonymously, pseudo-anonymously, and permissionlessly without the need for a third party. And Bitcoin is the greatest store of value ever created. Okay. What is a store of value? It's somewhere to place your economic energy, to carry it, or to transmit it two ways, through time and through space. To give you an example of that, if I Our current currency is excellent at transmitting through space. I can send you £100 today, almost at the speed of light, from my bank account to your bank account. Excellent at transmitting through space. Terrible at transmitting through time. Right? As I've shown earlier, it's losing purchasing power at certainly a double-digit rate every year. Gold, excellent at transmitting through time. Typically has always gone up in value. But it's terrible at transmitting through space. If I want to send you £100 of gold, that's going to take quite a while. If I want to send you £1 million of gold, that's really difficult. Now imagine I want to pay someone in Australia with £100 of gold or £1 million of gold. Very, very difficult. Bitcoin is excellent at transmitting your economic energy through both space and time. You can send it anywhere on the planet. Technically, you could send it anywhere in the universe if they've got an internet connection at the speed of light for a tiny cost, and it's currently increasing at around somewhere between 30 and 60% CAGR every year. So Bitcoin is excellent at transmitting your economic energy through space and through time by maintaining its purchasing power. What you're looking at here is the purchasing power, or the cost of the average house price in the UK. In 2010, it was £167,000, and that cost you 2.8 million Bitcoin. In 2024, the average house price was £293,000, and that cost you 5 Bitcoin. Now, you might think the price of the house has gone up. Realistically, what's happened is the value of the pound has halved in 15 years. But the cost, when you price it in Bitcoin, it's gone from 2.8 million to 5. And soon it will be worth 0.5, 0.05, or sorry, not worth, it will cost you 0.5 or 0.05 to buy a house with Bitcoin. Okay, Bitcoin headlines have given me a lot of FUD. FUD stands for fear, uncertainty, and doubt. In the full training, we run through lots of these. We run through, it's only used by criminals. It's not backed by anything. It's bad for the environment. It's not old enough. There's not enough data, etc., etc. We cover off the fact that people like to say it's a bubble. It's like tulip mania. But today, I'm only going to cover off two quick ones. So be careful what you read with headlines. Do your own research. What you're looking at here is all of the times that Bitcoin has been declared dead by the media, overlaid with its price. Seems to be doing pretty well. And we're going to run through Bitcoin is too volatile. Right? This is an outdated misconception. Like any asset or any commodity, because commodities are often more volatile than equities, Bitcoin can be volatile in the short term. But zoom out and think in decades. We think in decades for our clients so they can focus on the present. What you're looking at in the top right-hand corner here is the 200-week moving average of Bitcoin. It has never declined. In fact, Bitcoin has a 99.8% hit rate of returning more if you have just held it for a period of 200 weeks or more. So 4 years, 200 weeks. If you have held Bitcoin for 4 years, it has a 99.8% hit rate of returning more than you bought it for. Fidelity conducted a study in 2023 that showed that Bitcoin's volatility sat right in the middle of the Mag 7. Slightly more volatile than Amazon, Google, Microsoft, and Apple, less volatile than Meta, Nvidia, and Tesla. And here is an updated view of this chart. So this runs to the end of 2025. Bitcoin's average 30-day volatility was 40%. That is slightly higher than Apple, imperceptible from Google, Amazon, and Meta, and significantly lower than Nvidia's and Tesla's volatility throughout 2025. So six out of 10 Americans own Tesla and Nvidia, and it comprises, those two stocks alone comprise 10% of the S&P 500, and they are significantly more volatile than Bitcoin. So this is Bitcoin's volatility compression over time. This is what a maturing asset that's becoming mainstream looks like in real time. So Bitcoin is too volatile is an outdated misconception. And I would suggest that in order to just be neutral, an allocation to Bitcoin could match your clients' allocations to the Mag 7. I would imagine any of your clients have got anywhere between 0.5 and 2% allocated to each of the Mag 7 within their equity portfolios. Just to go neutral, you could match that for Bitcoin. Okay, so in the full webinar, I run through how you can get full exposure for you and your clients. Today, we're just going to cover off what can Bitcoin do for you and your clients. Your clients are probably already buying or asking about Bitcoin, and if they're not, they soon will. Aviva released a study last year that showed that 21%, just under 12 million people in the UK, have invested in crypto, with half of those having invested in Bitcoin. Now, to put that in context, that means roughly 6 million people in the UK, about 10% of UK adults own Bitcoin, and only 9% of UK adults took professional financial advice in 2024. That means that Bitcoin ownership is already more popular in the UK than professional financial advice. So if your clients aren't asking about this yet, they soon will be. The majority of Bitcoin holders are in the 35 to 54 age range. So 56% are in the 35 to 54 age range. And the reason they're in that range is because they are trying to buy assets that help them to close the delta between increased asset price inflation versus stagnating wages. You'll also notice that crypto ownership skews even younger. So over 50% of crypto are in the 18 to 34 range. They're not happy with 50, so somewhere between 40 and 60% CAGR every year. They're chasing the next 1000x in the next 15 minutes. So the younger you are, the more you're chasing the upside. But realistically, the Bitcoin owners are in the age range behind your current retirees. They're probably the children of your current retirees. If you want to keep that business or that family's business in your business, you're going to want to be able to speak to them in a language that they understand. Bitcoin could be a way to differentiate you, your career, and your firm. We are all risk managers in our lives, but we are professional risk managers for our clients. And at this point, a 0% allocation to Bitcoin is gambling that a 17-year trend will reverse, which is that Bitcoin is the single best performing asset over the last 17 years. And that for the first time in history, or in Bitcoin's history, equities and bonds will start returning more than Bitcoin. So doing nothing over the next few years might lead to only losing assets, clients, and staff to competitors. Bitcoin might be a hedge against a lost decade. What you're looking at here is the S&P 500 performance annually over the last 100 years. Every time the RSI on the bottom has trended down, we have had a lost decade in the stock market where we just range. Now, I'm not saying that's going to happen again. This RSI could turn around any day and start trending back up. But if it continues to trend down, historically, that would suggest that we are going to get a ranging stock market, what is typically called a lost decade. If you know your history during those periods, commodities outperform equities. And Bitcoin is a digital commodity. So it could be a hedge against a lost decade in the stock market. I'm not saying that's going to happen, but it might be. Bitcoin's asymmetric opportunity. If you believe Bitcoin is going to zero, it could still be a hedge for you and your clients. So what is a hedge? It's a way to be right, small, and to be wrong, big. So even if you believe Bitcoin is going to zero, but you allocate 0.5 to 1% of your clients' portfolios to Bitcoin. If you're right and it goes to zero, you're right small. You lose 0.5 to 1% of their portfolios. But if you're wrong and it continues to outperform for the next 2 decades, as it has done for the last 2 decades, then you're wrong big. And the best way to be wrong is to build wealth while you're wrong. Coming towards the end, don't look at the all-time highs, look at the yearly lows. Do you notice a trend? Where is Bitcoin headed? All of these headlines are within the last few months. Vanguard even eventually bent the knee in December. They had $1 billion worth of inflows in the opening 30 minutes when they opened up the IBIT ETF on their platforms. Things move very, very quickly in this space. I want to leave you with a good news story. So Bhutan mined Bitcoin using hydroelectric dams, and then they are not selling their Bitcoin, they're borrowing against it. And in doing that, they have avoided an IMF loan, increased their government staff salary by 50 to 65%, and they are now using the money to build a mindfulness city, which I absolutely love. And I promised you a little sneak peek of this at the top. So We have just launched our membership this week. So you get all of those things on the left. And if you sign up before the 30th of April, there is a link here, and I'll make sure I send it through to Martin to share with you. It's only £75 for the first year. And you also included within that £75, you get our full webinar that I've alluded to a number of times through the presentation, which counts as 2 hours structured CPD and is all of the training that you'll ever need to get up to speed on Bitcoin. And then we can keep you up to date through the membership program through our platform. What questions do you have? Martin, I was unsure if we had time for Q&A, if that's included in this, but if we do, then I'm open to questions.
Dan, we're running a little bit short on time, so that's raised a lot of questions for me, which I think it possibly has for other people. I think we should take it offline. I will share your details, obviously, and these slides with everybody. Just think we need to know a lot more about the subject rather than just dismiss it, as many of us have up to this point. So thanks for that, Dan. Moving on. The last couple of speakers will be very short because I want to be able to send you away at 9 o'clock. We have, if I can see him, Gary Metcalf. He's already waiting in the wings. You will be aware that we had Gives Day a few weeks ago. Gary's going to give us an update on the success, not only in the UK, but globally, of Gives Day. Over to you, Gary.
Thanks, Martin. Yeah, good morning, everybody. So yesterday, Michael gave me the heads up that I'll be giving 5 minutes this morning. It'll probably be less than that. So I've got no slides, but I want to give you an update on Gives Day, which was the 25th of March. There were 9 fundraisers for Europe, Helen West, Michael Bibb and myself from the UK, and 6 members from Greece and Poland. Our target was to raise $30,000 for the foundation, and we raised £52,506, which was absolutely amazing. And I think something we should be very proud of in the UK, because Gives Day last year, we raised 30,000. So I'm in charge next year again, I think. So I'll be looking to beat that. But what an amazing total. So thank you for everybody that contributed. There were 97 members from Europe who contributed, and we had 34 from the UK. 5 UK members did Inner Circle, which is $5,000. And we had 1 new member join Inner Circle for the first time, which should be celebrated. In total, Gives Day raised $430,000. So this will have a real impact to charitable organisations worldwide. Some members reached a new night level, which was really great to see. If you're not aware, there's 9 night levels. If you want to know your night level, then let me know, because we're all competitive. We all want to reach the next level. So a fantastic day all round, which makes the foundation so powerful. And it only works because members give back. And that's why it's important. We also need to reflect on something else. Many of us have either directly benefited from grants or seen the impact they've had on causes close to us. The foundation can only continue to do that if we all play our part. And we did play our part in Gives Day. So if you benefited in the past or intend to benefit in the future, I gently encourage you to think about how you can support the foundation going forward. Which the strength of the foundation isn't in what it gives, it's in the willingness of all members to contribute to it. And as the great Winston Churchill said, we make a living by what we get, but we make a life by what we give. So again, thanks to everybody who donated. It was an exceptional day for the foundation, and the money will change so many people's lives. So thank you all. It was fantastic.
Thank you, Gary. And from my position as UK chair, I'd just like to thank everybody that donated. However much you donated, it is all going to very worthy causes. I've been on foundation committees myself, so I see where the money goes. some very, very needy causes. So really much appreciated. In true MDRT style, I got thrown under the metaphorical bus last night because I only came back from Botswana yesterday. I was rather hoping that we would have had 3 speakers and I would be able to just host the event, but not. So Michael has said I need to bring this meeting home and for today, and you will probably be aware that I'm coming towards the end of my time as the chair for the UK. I've done nearly 2 years, so I'll finish later in this year. I've followed in the footsteps of some very notable chairs, so I feel that I'm in esteemed company. Some of you will know who they are: Sarah Hogan, Gary Metcalf, Sandro Forte, Kath Goff. There are many, so it's been an honour and a privilege to step into their shoes. Just to bring it home today, and this aligns with what Gary has just been talking about, just like to expand on my own version of whole person concept. For those that are members of MDRT, they'll know what that is. Those on the call that are not, MDRT is not just focused on creating an environment where we can run fantastic businesses and service our clients really well, but also how do we have a broader impact on society and the people around us. For me, there are 4 quadrants of life that I like to try and focus on. Working life, obviously, are the businesses we run, and that's why we're on this call today. Family, health, and my personal life. And I spent the last 15 years, much of it, spending a huge amount of time willingly in the first quadrant, working. I was determined to build a business that could give me the life that I wanted. I would like to think that we could all live equally in those 4 quadrants, and I appreciate that it is not always that easy, particularly if you're starting out or you are driven to create something. But many of you will know that I don't do normal travel, and every one of my trips is a survival situation. And I had one of those earlier this week. I think it was on Friday. I went to Botswana to do a safari on horseback, not in a truck. So my wife and I rode through the bush of Botswana, literally off the trails, in the thicket. And you never know whether you're just going to happen across either elephants, water buffalo, or any of the 3 big cats. So I did have a very, very close encounter with a lioness. And where there's a lioness, there is a daddy boy, probably within 50 to 80 meters. He's probably lying there doing absolutely nothing, waiting for his missus to go out and get dinner. What I do know about lions, though, is that if the lioness takes down a kill, the daddy boy will be there straight away because he eats before his missus. So my wife and I, along with 2 guides and 3 other young girls in their mid-20s, were riding down into a dried up riverbed, only to turn the corner and find ourselves 2 meters away from a lioness that was in the crouch position. And if any of you have got dogs or cats, you will know what I mean by that. They're ready to come for you. I was very fortunate to have a very good guide at the front who stood his ground, and he'd already informed us that we also had to stand our ground. But the guide at the back decided that he was going to leg it, and he tried to take my wife and the 3 other girls with him to leg it. And I stood with my guide Max, I'll forever remember him, because we had to face down this lion who was going to come for us. You cannot outrun a cat. So the answer is not to turn tail and leg it, because a big cat see something running away, and that just says dinner. So I'm here, so we obviously didn't get run down. But the reason to tell you the story is that life is very short. If you're at the beginning of your career or towards the end of your career, those towards the end of their career will know how quickly life passes. If you're at the beginning of your career, I fully understand that you're going to be working really hard. But going back to those quadrants of life that I think are really, really important, I would urge us all to consider whether we are putting enough attention into each one of those quadrants, because there will be a payback if you are all about work. If you're 90% work and family, health, and personal life are just taking up that 10%, there will be a point of regret at some point in the future. I would suggest that's just my opinion. So my lesson from Botswana was that life is very, very short. And in this particular moment last week, it felt even shorter. The whole thing was over within a minute, but the outcome could have been so different. So my message to you all today, to send you off as we head towards 9 o'clock, is to think in terms of those aspects of your life. Are they in balance? Is it all work? Is it all family? Is it all about health? Is it all about your personal life? Or is it now time to look back and look forward in terms of, is my life balanced? And this is one of the wonderful things that I have got from MDRT in the time that I've been a member. I thought I was joining an organisation to make me a better advisor to build a bigger business, but I got a lot more from it than that. I've got a lot more balance in life, and some of you might argue that it's imbalance towards trying to kill myself, because all of my trips are survival expeditions. I'm getting quite good at surviving, and hopefully there are many more trips in terms of, because that is my family and my personal quadrant. They're the things that I want to do. So I'd urge you to go back and revisit all those. And are you doing all the things that you want to achieve in your life? Because I can tell you now, there all day will come when all you'll have is memories. So we better make sure the memories that we've got are good ones. And when we're on our deathbeds, we can reflect and say, we led a great life in all those quadrants. And with that, it's 1 minute to 9. As promised, I'm going to send you all off. Have a fantastic day. I've had a great meeting today, listening to Chris and then to Dan and Gary about the wonderful fundraising that we've achieved on Gives Day. And that's it from me. I shan't take up any more of your time. I look forward to seeing you next month, and have a great day and the rest of the week.
Brilliant, Martin. Thank you.
Great job, guys.
Well.
Thanks everyone for their help today. Go well.